Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Your Stocks. I'm Nigel D'Souza. With me is Ekta Batra, and we have the most exciting part of the day coming up. It's the end of a series. So last 90 minutes, fasten your seatbelts. This market's going to move around. Remember, it's going to be one of the worst series that we've seen in the last one decade because the Nifty has lost roughly around 680, 700 points in this series itself. And the last time we saw such a deep cut in a single series in absolute terms was way back in 2008 itself. Remember, we had a very good start to the year. The Jan series did well, but the Feb series just gave it away. Technical levels that we're looking at, well, I think we should be looking at the 100 DMA. That's at around 10,405, and that's going to be a rather important mark on the upside because we've seen quite a bit of a recovery. And in today's trading session itself, the 10,400 call, that's been the most active. The premium is at roughly around 10 to around 15 rupees. So the writers of that particular strike, they are hoping that in fact the 10,410, 10,415 odd levels can hold out for this particular expiry. That's for the next 90 minutes. But even if you take a look at the 10,350, there appears a bit of a strategy going out there. You write the 10,350 call, you write the 10,350 put, you'll get closer around 40, 45 rupees approximately. And then in fact, you're working with that range of around 10,310. Recovery from the low point of the day, we're moving towards the 10,400 odd mark, 10,400, 10,410. That's the level, in fact, that the bears will look to defend in today's trading session. So let's see whether or not they can hold on to those levels. Remember, after a long time, the bears are going into the final hour of expiry with all the ammunition because they have made all the money in this particular series. So we'll keep an eye out on that mark as well. But we've got plenty of queries that have come in. So let's get straight to answering them. Vinay Chopra as well as Rajat Bose, both of them are with us. Good afternoon, gentlemen. Thanks so much for joining in. Well, we have our first query. So let's pull it in then. We have Chaitanya who calls us from Mumbai. And I think he has investments in Balrampur Chini. Hi, good afternoon. How can we help you, sir?
Hi.
Hi, what's your query?
Sir, I am holding Balrampur Chini from 2000 last 1 year.
Okay.
At 105 rupees.
Oh, okay.
Around 150 shares. My intention was to hold 2 to 3 years, but it's from 105 to it went to 170, 160, then again it's come down. So what is your view on that, sir?
So you're a long-term investor. You can hold it for another 2 years if the need arises, right?
Yeah.
Okay, all right. Vijay, your take. He was making good money. He saw the stock at higher levels. Unfortunately, he didn't book out. What should be the strategy now? He doesn't mind waiting in for a couple of years more. Should he?
Yes, he should, and I think that with a stop loss of 97, he should hold on to the stock. I think there's a correction which has happened in the entire sugar space, and there are green shoots of revival. If you look at Mawana, we look at Balram Chini and other players in the sugar market. So there is a good possibility that we'll see a bounce back in sugar space, and the government is also trying to help out all the manufacturer by putting in duties on import. So I think he should hold on to the stock with a clear stop loss of 97. Probability is that he can see 170, 180 levels again.
Okay, all right. Rajat, what would you recommend on Balrampur Chini? It's been a rough few months for them.
Yeah, actually sugar stocks are, if you look at the medium-term chart and if you use the weekly chart, then you will find that there can be a minor bit of rally. Say in case of Balrampur, maybe you will see a rally up to say 125 or so at some point in time, but that should be used to actually get out of this, because my feeling is that once this 200-week moving average, which is located around 105, then Vijay's 97 stop loss could be the next target. And this has been showing distribution for the last few months at higher levels of around say 150 to 170, and after that it is falling. So sell on rallies should be your strategy instead of holding on to sugar stocks. And sugar stocks, if you hold on, then there could be a wait for about say 2 to 3 years for a minimum, and it could sometimes be 4 years before your prices actually come back to you. So I don't think that would be a good strategy at all.
Okay, all right. Then, so that's a call coming in on Balrampur Chini. But we have our next query that's already in. Sudhir writes to us from Andhra Pradesh. He holds around 400 shares of Union Bank at a price of around 115 rupees. Short-term investor, should he book out? Rajat, Union Bank making a bit of a loss. Short-term investor, get out or wait for a bit of a bounce?
I would say there could be a minor pullback rally, that is in the offing. Probably that will happen from in the next series, but that should be used as means to exit from the stock, because the stock is not looking good at all. In fact, it goes without saying that the PSU bank stocks are looking pretty weak, and this weakness is unlikely to peter out and morph into a sustainable upswing anytime soon.
Well, for the markets, it's turning out to be a little bit choppy. We have recovered from the day's low, but nonetheless, it is expiry. So the Nifty is currently at around 10,368. If you're talking about specific stocks, Aurobindo is ruling the roost at this point in time, despite it being excluded from the Nifty. So interesting moves coming in from Aurobindo. They're also at the IIFL conference, so some focus on account of that. And Sun Pharmaceuticals is following suit. So that stock is up around 2.6%. But you can't forget what's happening with a couple of these IT stocks as well. So, for example, HCL Tech is up and about. We have TechM, which is up around 1% Infosys, which is up around 0.5% as well. But let's get another query now. We have Ramesh, who calls us from Hyderabad with a question: investments in TBZ. Hi, Ramesh.
Yeah, hello.
Hi, your query is on TBZ.
Yes, TBZ. I am holding since 1.5 years.
Okay.
At the rate of 82 rupees. I want to know the future of this stock.
Okay. And how long are you okay with holding it for?
I can hold it for another 2-3 years.
Okay, you can hold it for another 2 to 3 years. That's on TBZ. Ramesh, just hold that thought, because before we get your query answered, we have some statements coming from Balrampur Chini, where they've said that they will be able to meet all of their liabilities as and when they fall due, and maybe a couple of other statements should come up for you. It's no ground on which the company could be found unable to pay its debts. So that's what the company is saying about its solvency at this point. So there's some clarifications which are coming in there. But Vijay, what would you recommend on TBZ? Do you think that it would be prudent to hold, considering what's happening with the sector, or do you think that maybe selling out would be a good option?
Well, I think that sell-on rallies would be my strategy. The entire sector is, clouded with suspicion as of now. Which company is doing what are the banking limits, how they have taken, what is the valuation of diamonds. Generally, we have seen what has happened in the entire Nirav Modi case. So, again, there are so many opportunities, or would be so many opportunities in the market in the next few months. So, it's better to be out of controversial sectors, although TBZ doesn't have any controversy related to it as of now. But who knows what may arrive. Banks are actually going all out and searching how these diamond companies and jewelry companies operate. So I would say that if he's getting profit, there's profit on the table, it should be booked. So exit on rallies would be my call.
Okay, exit on rallies is the call that's coming in there. By the way, another stock that's been in focus all of this series in the last few months has been Fortis. Ekta has been tracking that very closely. Ekta, take a look at the intraday chart of that stock. It's suddenly down close to 3%. I think it's suddenly moved to the low point of the day. So some action. It's been that sort of a stock actually for the last many days. Volumes as well, massive on the counter as well. But I think we can squeeze in another query. Himanshu Rajdas from Kolkata. He has 1,200 shares of HUAC at around 140 rupees since the last 3 months. Medium term investor wants to know whether or not to hold or to sell onto the stock. Vijay, do you track this counter? Making a big loss actually.
Yes, I do, and I think that there could be some pain, and he should have a very strict stop loss of 105 here. And if at all it breaks 105, we should surely get out of the stock. But again, I also see a correction happening in the markets. There might be some kind of surprises coming from US and global markets. So it would be a good strategy wherein the things are not very clear, to sit on cash and wait for correction to happen. You'd get many good frontline quality stocks when the correction happens. So HOAC, as of now, what I see that he should have a stop loss of 105 and wait for some kind of a bounce in the market and exit on rallies.
Okay, all right. Well, some positive news coming in for Jain Irrigation. They bagged an order worth 375 crores from the Pune Municipal Corporation. So that stock is a little weak today.
Markets continue to be under pressure. Lupin is a stock that has suddenly seen quite a big slip actually. It's only looking like a 0.5% cut. But intraday chart really should tell you the picture there. UPL as well continues to see some selling pressure. And I think ICICI Bank has seen a bit of a downtake, and that's what's really dragging the index. The Bank Nifty, by the way, is down 110 points now as we speak. But I think we have another query that's come in. Yeah, we have a query that's come in from Harsh, who writes to us from Assam, holds 5 shares of Cadila at a price of around 448. A long-term investor, though, asking, what should I be doing? All right, Vijay, your take, small quantity, 5 shares, but being invested. So what would be the strategy?
Well, there is nothing much to lose, and I think that, pharma somehow, somewhere, seemingly is trying to find its feet. And, when we see that rupee weakens and, so it happens that the exporters generally get the benefit of the same. So pharma and IT should be benefited, and I think that it's a very, very small quantity, no harm in sticking around. And I think that the damage, the entire sector is already damaged a lot in the last few years. I don't think much is there to see on the downside. So hold on. I'm sure that it would start coming up soon, and we'll see good things happening in pharma as well.
Okay, that's optimistic. But Rajat, what would you recommend on Cadila?
Well, in a similar vein, I would say that hold it with the stop below 380. 380 happens to be the recent low, and if it were to fall below that on closing price basis, then seek an exit. Otherwise, carry on. As Vijay said, no harm in holding such a small position. At least he can see higher levels going forward, Cadila being Cadila. Ekta would testify.
All right, well, Cadila has been more resilient than the others, at least in the pharmaceutical space. But look at the likes of Biocon, which is spiking up around 5% today. They did have those 6 observations come through for the Malaysia plant, but I think the street knows that the pre-approval inspection for that particular facility was likely for the biosimilar insulin glargine. So maybe the view being taken in the market is that those 6 observations will probably be resolved, and the market's looking ahead at the opportunity for insulin glargine from Malaysia as opposed to any big issues. Turning out to be choppy again for the market. So the mid-cap index is back down around 0.3%, and you're seeing that kind of profit booking coming in for the Nifty as well. So you know that it is expiry day. Currently the Nifty is at around 10,352. 3 p.m. is when we'll see which way the market goes as well. But a lot of broader market stocks are gaining, so do watch out for something like a Quality, which is up around 6% We have other stocks such as even something like an Autel Communication, very low on volumes, but nonetheless that stock is gaining, and even something like a Unichem Labs, Reliance Naval and Engineering also doing quite well today. But we have a couple of more queries. We have Narendra Kumar, who writes to us from Bihar. He wants to buy 400 shares of Reliance Naval and Engineering for the long term and wants to know the right time to enter the market. Vijay, your thoughts?
Well, I think that, although Reliance Naval seemingly has some good projects up on its sleeve, but again, looking at the market conditions and the entire ADAG pack, we can see some kind of a sell-off happening. And so I think that if somebody needs to enter, I think 28, 30 would be the level I would suggest, where you can get into Reliance Naval with a longer term perspective. But I think that there could be some kind of a sell-off and a correction even from these levels.
Okay, all right. I think we can get Rajat's view as well. Rajat, your view?
I would say I would use 30 as my stop loss, and since it has come down so much and it is testing the major lows almost, if one were to buy for the long term, take a contrary view, start buying here at least partly, go all the way down to about say 32, 33 kind of levels to buy, and put a stop loss below 30. That is how you can actually take a contrarian view and buy into Reliance Naval, probably provided you are actually betting it for the long term.
Okay, all right. Rajat, as well as Vijay, we're going to let you go on that note. Thanks very much for joining in this afternoon and taking us through all of those queries.